Okay, let's dive right into this masterclass and decode exactly what the examiners are looking for to push your grade from a B to that highly coveted A star. Look, if you're sitting for the Cambridge Accounting 9706 exam, you already know the deal. The margins for error are incredibly thin. You aren't just being tested on whether you can balance a ledger or memorize a formula. No, you are being tested on your strategic cognitive thinking. So today, we're putting on our Master Coach hats. We are going to look through the exact lens of a Cambridge senior examiner. We're going to dissect those complex, high-tariff questions, those massive 9 to 15 mark essay and problem hybrids that always seem to trip people up. And we're going to deploy critical thinking strategies that actually work. To make this as practical as possible, throughout this explainer, I want you to imagine two hypothetical scholars working alongside us today. Let's call them Alex and Sam. Now, Alex is highly technical. Alex excels at formulas, hard facts, crunching the numbers, but totally freezes up on open-ended evaluation. Sam, on the other hand, is a brilliant creative thinker, super strong at making arguments, but struggles with structural precision and strict time management. Does that sound familiar? Maybe you relate to one of them. Well, by the end of this session, we are going to synthesize both of their strengths into one perfect, flawless examination approach. Let's get into it.
This insight is straight from a senior examiner, and it is our high-stakes reality today. Mastering the distinction between these two types of budgeting is an absolute necessity. I know it sounds a bit dramatic, but it's literally the truth. Think about it from the examiner's perspective. A B-grade student can tell me what a budget is, right? They can calculate a basic variance and call it a day. But an A-star candidate? They understand the fundamental behavioral differences of costs under varying activity levels. They understand that a fixed budget is essentially a financial straitjacket, while a flexible budget is a living, breathing financial mechanism that adapts to reality. The principal examiner reports consistently highlight the exact same issue year after year. Students hit a ceiling in their marks because they treat these two concepts as interchangeable mathematical exercises rather than completely distinct management tools. We are going to tear down that ceiling today.
Here's our strategic blueprint for today. We'll start with core principles, contrast flexible versus fixed, dive into the method mark strategy, scale the evaluation framework, and finish with top examiner warnings.
Let's start with those foundational principles and unpack exactly how Cambridge structures its assessment objectives.
3. That number represents the 3 distinct cognitive domains you absolutely must hit to secure top marks. We're talking about knowledge and understanding, analysis, and evaluation. In Cambridge terminology, these are your assessment objectives. So, AO1 is your knowledge, the facts, the definitions, the rote learning. This is exactly where our scholar Alex naturally excels. Give Alex a definition and it's perfect. AO2 is analysis. That means taking that baseline knowledge and processing it through the specific scenario or case study provided in the exam. And then we have AO3, evaluation. This is making judgments, weighing alternatives, and forming a definitive, evidence-based conclusion. This is our scholar Sam's domain. Now, the absolute tragedy I see year after year is candidates writing 3 solid pages of brilliant AO1 knowledge only to receive a tiny fraction of the marks. Why? Because the question actually demanded AO2 analysis and AO3 evaluation. You literally cannot get top marks unless you satisfy all 3 domains.
The core philosophy of Cambridge examiners is prioritizing logical, structured reasoning over simple memorization. They expect a connected, conceptual understanding that you can transfer to completely unfamiliar contexts. And this ties directly into what we call command word anatomy. Let's deeply contrast the verbs that literally dictate your exam fate. When a question says explain, it's asking for AO1 and maybe just a touch of AO2. You provide the how and the why. It's straightforward. But when a question says to what extent, listen to me, that is a massive trigger warning that AO3 evaluation is demanded. You have to argue the gray area. You have to look at both sides. Similarly, we need to contrast analyze with evaluate. Analyze is asking you to break a complex problem into its component parts and show how they relate to one another. Evaluate, on the other hand, demands that you judge the worth or validity of those parts. If you merely analyze when the prompt explicitly asked you to evaluate, you cap your grade instantly. Depth always wins over superficial breadth.
Now let's contrast the terminology that students often find so challenging to differentiate and apply our analytical depth.
Okay, this brilliantly illustrates the massive dichotomy between the rigid, static nature of fixed budgeting and the adaptive, context-driven reality of flexible budgeting. Let's jump into a digital study suite with Alex and Sam to see this in action. Imagine a manufacturing firm sets a budget for 10,000 units. Alex, our technical thinker, looks at that 10,000 unit baseline, locks it in, and says, well, that's the fixed budget. It's rigid planning, completely unadjusted for actual volume. But then the firm actually produces 12,000 units. Alex wants to compare the actual costs of 12,000 units against the fixed budget for 10,000 units. Sam jumps in and immediately starts debating this, arguing that comparing actuals to a fixed budget of a different volume is fundamentally useless for performance management. And Sam is right. You're comparing apples to oranges. A flexible budget recognizes the critical distinction between fixed, variable, and semi-variable costs. It recalculates or flexes the allowed budget to exactly match that actual activity level of 12,000 units. It provides a true, fair, like-for-like comparison. Understanding this connected principle and why Sam's approach is necessary for real-world business control is your absolute baseline for AO1 and AO2.
So, moving on, the crucial point is knowing how to systematically secure method marks during your exam. This is the difference between scraping by and dominating the paper. Now, right before we use this framework to solve the absolute hardest part of the problem, I need to pause our session for a quick second. If you want to consistently decode these high-tariff questions and crush your Cambridge exams, you need to hit that subscribe button for Ace the Exam's IGCE O&A levels right now at acetheexam_IGCSE. Enable all notifications, hit that little bell icon you're seeing pop up on your screen so you never miss a weekly Cambridge breakthrough strategy. All right, let's get back to it. This procedural framework right here is your secret weapon. 1. Deconstruct. 2. Extract. 3. Select. 4. Execute. And 5. Verify. Now let's watch Alex and Sam actively draft a model response using this. Normally, Alex jumps straight to step 4, just desperate to crunch the numbers. Sam usually jumps all the way to step 5, wanting to write a flowing narrative conclusion. Both of those approaches are heading for disaster. Instead, we have to force them to follow the steps. Step 1. Deconstruct those command words. Are we explaining or are we evaluating? Step 2. Extract. Pull only the cost data relevant to the specific activity levels. Step 3. Select your framework. Are we using marginal costing or absorption costing? Step 4 is the actual execution. And step 5 is verification. Listen closely. Examiners award method marks for the process. If you make a math error in step 2, but you carry that wrong figure flawlessly through steps 3, 4, and 5 with crystal clear notation, you are going to salvage the vast majority of the marks. Do not just write a final number on the page. You have to show the examiner your procedural framework.
Within that framework, your ability to extract data from tables and interpret complex relationships is what turns a mediocre answer into a flawless one. And this is exactly where Alex and Sam just hit a major roadblock. They're looking at semi-variable costs, and they are totally stuck. To get unstuck, you must be able to separate the fixed and variable elements of those semi-variable costs. If you fail to interpret this relationship, you literally cannot flex the budget. Wham shines. Interpreting what that extracted data actually means for the business in reality.
Let's move up to the highest tier of the marking bands, critical evaluation. This is where the game is won or lost. This defines exactly what Cambridge means by evaluative thinking. You must actively question assumptions, consider different perspectives, and justify every single decision with hard evidence. Let's look back at Alex and Sam drafting their model response paragraph by paragraph on screen. They are trying to write a paragraph evaluating the use of a flexible budget for a highly seasonal business. Alex writes, "Flexible budgets are better because they show accurate variances." Okay, it's true, but it's pure AO1 and AO2. It lacks any real depth. Sam steps in, arguing for a broader perspective, and writes, "However, flexible budgets are time-consuming. Better, sure, but still lacking structural precision." I'm going to use my picture-in-picture right now to pause their session, step in, and explain the cognitive strategy we need to get unstuck here. We need to use the paragraph balance formula. Let's rewrite this flawed section out loud together. Instead, we write, while flexible budgets provide superior control by isolating volume variances from expenditure variances, boom, that's your AO2 analysis. The primary limitation in this specific seasonal scenario is the assumption that variable costs remain perfectly linear. In reality, bulk material discounts during the peak season completely distort this linearity, meaning the flexed benchmark may still be fundamentally flawed. Boom, that is your AO3 evaluation. Do you see that? That is how you transition from a mediocre, factual answer to a flawless, full-mark response. You have to question the underlying assumptions of the accounting model itself.
Top-scoring candidates always identify the limitations of the budgeting evidence and explain how those assumptions affect their final conclusions. Let's jump into an immersive, interactive workshop segment right now. I call this Pause and Practice. Imagine a complex variance analysis chart on your screen right now, and a 60-second countdown timer has just started. You are tasked with analyzing the data. Now let's look at scene 2, Spot the Flaw. I'm putting a poorly written student answer on the board. The student wrote, "The adverse variance of $5,000 means the production manager performed poorly." I want you to find the 3 massive errors in that sentence. Got 'em? Okay, let me systematically highlight and annotate this for you, dissecting the correct paths and revealing the exact traps the examiner set. Error number 1, it assumes the variance is purely operational. It completely fails to consider if it was actually a planning error in the original fixed budget itself. Error number 2, it doesn't separate the variance into price and usage. What if global raw material prices spiked uncontrollably, completely out of the manager's hands, while their actual material usage was highly efficient? Error number 3, it fails to offer any alternative interpretation. You must always identify the limitations of the raw numbers. The numbers on the page are just the start of the conversation. They are absolutely not the end of it.
Finally, let's step into the shoes of the principal examiner and look at where students consistently lose marks. Based directly on the principal examiner reports, what are the exact traps you need to avoid? We aren't guessing here. This is the hard data straight from the people holding the red pens.
These are the 3 biggest roadblocks standing between you and an A-star. Let's dissect them one by one. Warning 1, being overly vague. Writing something like costs go up instead of total variable costs increase proportionally with output while fixed costs remain stepped. Specific professional terminology is totally non-negotiable. Warning 2, neglecting proper accounting formatting. If the question asks you for a budgetary control statement, it must look like a formal accounting statement. It needs a clear title, it needs distinct columns for original budget, flexed budget, actual results, and variance. And those variances must be explicitly denoted as adverse or favorable. A messy page of scribbled calculations is just going to bleed marks. And warning 3. Well, warning 3 is so important it requires its own dedicated focus. Point number 3 is the ultimate classic mistake. You must always, without fail, link every single point you make back to the specific context given in the stimulus. Let's say the exam question is about a bespoke, custom furniture builder, and in your evaluation, you start talking about mass production flow lines. You are going to get 0 marks for evaluation. The examiner wants to see proof that you actually read and understood the case study. If that custom furniture builder employs highly skilled, salaried staff, your evaluation of their labor cost behavior has to reflect that fixed, salary nature, rather than just blindly treating labor as a standard variable cost because that's what a textbook example did. Context is king. You must anchor your theoretical accounting knowledge to the actual reality of the business described in the prompt.
So a quick cognitive strategy to avoid those vague answers and ensure you hit every single mark is to build your own acronym for all the budgeting factors. That way, you never freeze up during the stress of the exam. Let's create one right now, based on everything we've covered in this masterclass. Let's use FACTS, facts. F stands for format. Is my layout correct and professional? A stands for assumptions. What is this specific budget assuming about cost behavior? C stands for context. Am I directly linking my answer back to the specific business scenario? T stands for terminology. Am I using precise words like linear, semi-variable, and adverse? And S stands for specifics. Am I showing clear step-by-step workings to secure my method marks? Write FACTS at the top of your exam paper the very moment you open it. This is your last 5 minutes review checklist to ensure you haven't dropped any silly, avoidable marks.
Well, our scholars Alex and Sam finally found their breakthrough today by perfectly combining technical precision with structured contextual evaluation. To synthesize this entire masterclass, I want you to remember our 3 core memorable pillars. First, the 3-step question scan to deeply dissect those command words. Second, the paragraph balance formula to ensure your AO2 analysis and AO3 evaluation are perfectly weighted. And third, the last 5 minutes FACTS checklist to secure your presentation and context marks. I want you to take this exact systematic framework, sit down and apply it to a past paper today. You will immediately see the difference it makes. Consistent strategy crushes Cambridge exams. Do not leave your grade to chance. You need to hit that subscribe button for Ace the Exam's IGCSE O and A levels at aceexam_IGCSE right now. Turn on that notification bell so you get all our future exam hacks and leave a comment down below telling me exactly what grade you are targeting. Commit to it publicly right now. Keep practicing, keep evaluating those assumptions, and I will see you in the next explainer.